Good afternoon, everyone. My name is Brock McLean. I'm the Partnerships Manager here at Armytage, and welcome to Armytage's Money Talks. I'm sitting alongside Chairman Lee Iafrate, and we've just finished our weekly ICM. Lee will start off by talking about our two main flagship funds performance for the month of September. How were the performance numbers there?
Yes, thanks for that lovely introduction there, Brock. No, we had a very good month since September. Actually, the quarter's actually kicked off very, very well for us, and long may it last. ELF had a 44 basis point outperformance versus its benchmark, being the XTO 100 accumulation, and ASOF had a 1.22% outperformance against the All Ords accumulation. So we're very, very happy with those very good numbers. Also, the Equity Income Fund went its September distribution, and cash is a very nice thing to have in people's pockets. So far this calendar year, we've won 8 out of the 9. And with Christmas approaching, if we could get it over double digits, it'll be very, very good. So things are going very, very nicely here. Key things that we've managed to get right, we've been overweight in the key sectors, particularly banks, and also some good selection in some of the smaller stocks, things like ING, the chicken people, and also HomeCo, the property trusts, did very, very well. And running into the next period, right?
Yeah, so coming into Christmas now, what's sort of the focus from your perspective, and I guess from a fund performance perspective, what will we look to be doing in the lead up to Christmas?
Yeah, well, the thematic that came out of the meeting today was one of increasing our defensive approach. Comments that came out of also was the supply-driven inflation from China. This has been hanging around for a while now, but it's certainly starting to rear its head. So what we'll be doing in our funds will be increasing our exposure to defensive stocks. A smaller cap stock that we'll be looking at increasing our exposure to would be something like a Bega, and other related food type businesses, a Treasury Wine, even though it had a little bit of business with China, but they're probably seen as a bit more defensive. Things like a Woolworths, Wesfarmers, even though we're well exposed there, we'll probably look to be increasing our exposure and reducing more the high PE stocks, and the growth stocks will probably maybe not feature as well performance-wise going into Christmas, Brock.
Yeah, I think coming out of that meeting, I think what looks like a bit of a big risk right now is China, and looking what's happening in terms of their energy prices, and you're hearing some stories or some inside stories coming out of there that they're only getting sort of 10 days of power per month in some industries. So it's going to be very interesting to see how this all plays out. On top of what Xi's doing with the crackdown on capitalism, and also what's happening with the Evergrande situation, and potentially defaulting on $300 billion worth of debt there. So that's a pretty good focus for us going into Christmas, is just being a bit more defensively minded, and really shoring up our good streak of outperformance so far this year.
And the only other thing, just on that as the last point, cash weightings in our funds were also a good contributor, and we'll probably be looking to increase our cash weightings running into Christmas. Not getting over bearish, but certainly being aware that the goalposts are just starting to slowly move with one of our major trading partners, and the impacts that it could have on world growth.
Yeah, all right, that's good to know, Lee. All right, that's all we've got time for today on Armytage's Money Talks. Tune in next week for our next episode.
Thank you.